Bill, always a pleasure to have you here in the mornings. Let's talk about that Fed meeting. The expectation is nothing happens. The Fed has made it very clear they're on hold. So what is it that can happen today that could either be that big upside catalyst or downside catalyst, or is this steady as she goes?
I think, even before the payrolls report, it was likely, they were on hold. They were saying that after that payrolls report, there's no chance of any move whatsoever. I think people are going to be watching the dot plot, to be honest. If that excites you, sure, watch it. But the fact is, I think you're probably can pay a little less attention to this one than normal, because they don't really know where they're exactly going next. Again, until further notice, I think hold is what you should assume.
All right, so you mentioned that dot plot, a.k.a. the Fed's forecast of future conditions. It's when all the members kind of sit around and they give their forecast. They think, what are rates going to be in the future? Do you think that anything can be said or gleaned from that dot plot that would indicate any change in trajectory for the Fed in 2020 with regard to their rate plans?
While you may see a few, showing some sort of, wishes, I'll say, of a hike in 2020, what we've learned is what they think, pretty far in advance and what actually happens can be extremely different. So while, you might see some reaction and obviously some people talking about if you show some of the plots showing more hikes or a hike even, maybe it gets some press in terms of talking about it. But at the end of the day, I don't think the market really will react much because, again, I think, we've learned not to read too much into it because they just don't really know what the path will be. I think a lot of it really, you were talking about earlier, market or the economy seems to be firming up somewhat. If we continue to firm up and see the inflation pick up, they will hike. But we have to see that first. All
right, let's talk about what the markets will react to. Trade is obviously one of them. We've seen some of the moves over the course of the past couple of weeks and months now at this stage. What exactly needs to happen? What is priced into the market right now? And what is it that could happen that could possibly derail the near record highs the market continues to sit at this stage?
Yeah, so I think I don't know if it's fully priced in that we get some sort of a détente, but certainly a good percentage is priced in. I think what derails it is if you get an escalation, so if you get really a look like you're going to continue to see tariffs get ratcheted up over time. I don't think that's necessarily going to happen. Again, I think you saw even yesterday we had conflicting headlines. I expect we're going to have conflicting headlines for a while here until we get the final decision. But, the market didn't really go anywhere because I think part of what's helped us stay a little bit more stable despite the, cross currents is that the economy has gotten a bit better. We're no longer, at least seemingly, teetering on the edge of recession, which that's part of what was really the worrisome part about the trade war was that, the economy was slowing down. The worry was push too hard on the trade war. That was going to tip us over. We've come kind of away from the edge. So while it's on net good to get done with the trade war, and hopefully that'll pick up both the U.S. economy and the global economies, it's probably not that thing that is looked at to tip us down if we don't get a deal right now.
So, Bill, if that's your base case out there, that the economy still grows, things are kind of okay and constructive for 2020, where's the best place to be then? Where is there going to be the outperformance, the alpha, come 2020?
Yeah, so I think one is, stay on the cyclical side of the equation. So the industrials, consumer discretionary, things we've been really talking about for most of the year. I think that continues to be more attractive versus kind of the staples, things that you would put at utilities, things you'd be in if you thought things were slowing down. The other part that we've just over the last few weeks started to talk about was really small caps. So I think small cap stocks here in the U.S. have gotten more interesting. They've lagged really year to date, but have started to pick up steam here. Why have they? Well, I think one of it is you've seen the economy picking up. When the yield curve steepens, it typically helps small banks. Small banks are the biggest component of the small cap stock index. So I think that's a place to really think about as you think the economy, if you agree with us, that the economy is probably picking up a bit of mojo here.